To order. We do have a couple of members that are in other committee meetings this morning, two of which are in the Ways and Means budget presentation, and then Senator Warren is expected back in a few minutes, but we will get started anyway. First item on our agenda is a request for bill introductions. Do we have any that I'm not aware of at this point? Eric, are you sure? Okay, you've been our lead for a couple of days. Want to make sure we got them all at this point. Okay, today we are having an overview of the Kansas credit unions. Julie Murray, who is the Kansas Credit Union Supervisor, is here today to give us a presentation on the status and the health of the Kansas credit union system. Julie, welcome.
Good morning, Mr. Chairman and members of the committee. Full disclosure, I have 3 children who are vivacious. I probably don't need your microphone. I'll try not to blast you out. I am Julie Murray, the current administrator of the Department of Credit Unions. I wanted to thank you for your invitation this morning to visit with you about our agency and our state chartered credit unions. If you don't know, our first credit union was chartered in 1929 in Kansas by members working for civil service and the postal employees, and that credit union is still here, we're proud to say. We do have 50 state chartered credit unions right now, excess of $6 billion in assets. Our largest credit union is Credit Union of America in Wichita, Kansas. Our smallest is Catholics United in South Hutchinson. We still have 3 credit unions that are home-based credit unions where they're in the basement of the manager's house or their front room. Most of our credit unions were initially chartered with a specific field of membership to serve a group of employees or a geographic area. Kansas law allows credit unions to include association, employee group, or the geographic area, and most of them do all 3 now. We have 1 state chartered corporate credit union. That corporate credit union serves Kansas, Missouri, Oklahoma, Nebraska, and Colorado credit unions with investment services and cash management type products. Our agency was originated in 1968 when the legislature approved the formation of a standalone agency for the regulation and examination of our state chartered credit unions. Before that, we were with the OSBC. We are a fully fee-funded agency. Our state chartered credit unions provide us with an annual supervision fee that goes into our credit union fee fund, and then we remit $100,000 to the general fee fund every year. Our staffing is very small. We have 12 FTEs. 8 of those are examiners and 4 administrative positions, including myself. The statute requires that we examine each credit union at least once every 18 months for safety and soundness and compliance with laws and regulations. Our average is about 15 months, and we've been keeping that since about 2005. We use the standards that are set by the NCUA. We work in tandem with them on several examinations a year. Our state statute requires that our credit unions be insured by the National Share Insurance Fund, which is administered by the NCUA, which is why we work so closely with them. When we look at our credit unions, we review several different risk areas, and we assign them CAMELS ratings. And we rate them 1 to 5. The 1 is the lowest risk financially, and 5 is the highest. The areas that we look at is capital, asset quality, management, earnings, liquidity, and sensitivity. Currently, we have 9 credit unions that are rated 1. We have 26 that are rated 2, 12 that are 3, and 3 that are 4. We consider a 1 and a 2 a very successful and sound financial institution that requires very little supervision on our part. The 3s and 4s, in case you're interested, are mostly earnings issues. Right now in Kansas, our smaller credit unions are struggling to keep the marketplace and stay viable. We also look at the risk areas and assign a risk rating of low, moderate, or high, and which direction we think that will be going in the future based on what we're seeing. That's a tool for us to plan our next examination process and let the credit unions know what we're thinking. We currently partner with the NCUA to complete joint examinations. Every year, it's usually between 15 and 20. The NCUA calls us and lets us know which credit unions they would like to join us on every year. They do that based on asset size. The larger credit unions with more sophisticated products they like to be in. They want to be in every credit union at least once every 5 years as the insurer. Or if they see an area of risk that they think is increasing that they want to go in and be proactive on, they'll call us and ask to join the examinations. We do lead those examinations and represent our credit unions during them. So our challenges as an agency, we see a decrease in the number of credit unions every year. It's like banking and it's nationally. Mergers happen for a couple of reasons. We see a lot of mergers in Kansas because sometimes our smaller credit unions have long-term managers that retire and they don't have the ability to find a replacement. So they'll find a like-minded credit union and merge. Another thing is scalability. Their processes are expensive, and if they merge together, they can do it a little bit more economically and provide better services. We also are working to keep up with the credit union industry, really. Consumers are changing their behaviors every day. The technology that they like is moving at a much faster pace than regulation does. And so for us trying to stay abreast of all of the technology, how that works, so that we can provide some clarity to our credit unions is one of our challenges. We also have the same problem all businesses and agencies have had the last year, retention and recruitment. Right now, we're in a good place, so we're focusing on retention. One of the things that we're doing to help with that is a hybrid schedule for our examiners. Examiners are typically out on the road regularly, and through the pandemic, we had to take a remote posture. And we've learned that what we can do now is send part of the team out into a credit union and let the other team work remotely so that they don't have to travel as much. Save my expenses, save my examiners. So our credit unions they're going to face some challenges as well this year. Operationally, all credit unions continue to focus on the bottom line. Just because they're not-for-profit doesn't mean they don't have to have sufficient earnings to provide those services to our members, and they get more and more expensive all the time. The recent economic downturn is going to be a test for a lot of our credit unions this year. The interest rates rose rapidly, and it's going to take a minute for the credit unions to adjust their balance sheets. So we think that their earnings will be less this year. Their liquidity will be less this year. So they're going to have a challenge this year, but they've been through this before, and they're in a good place to take on what they're seeing. All of our credit unions look for ways to stay relevant to our members. Our really large credit unions are competing against very sophisticated financial institutions and non-banking with the technology. Our smaller credit unions just don't have the resources to compete on that level. And as consumers like to finance at dealerships or not have to go back and forth to the credit union, it makes it harder for those credit unions to stay relevant. So they're searching for a niche that they can stay in touch with their members, find something that they can serve them that the others don't. And the last thing is cybersecurity. It has been and will be a priority for us and our credit unions for a very long time. Many of our larger credit unions have had specialized IT examinations by NCUA specialists on the joint examinations that we've had the last few years. They've requested to bring somebody in. They've given our credit unions a laundry list of suggestions to help fortify their security protocols. Just a few statistics about our credit unions, and these are as of September 30th. This is the last financials we have. We had 533,000 members in the state of Kansas. Credit Union of America is the largest with assets over $1.3 billion. Catholics United in Hutchinson is the smallest with assets just over 200,000. And if I was going to give a commercial for them, they serve members in a way that nobody does. They do small loan amounts that most financial institutions can't afford to do. That's their vision. Sometimes it's a difference between a family making it and not. Catholics United is also our newest credit union. They were chartered in 2005. Our credit unions offer savings, checking, share certificates, debit cards, online banking, and bill pay. Our largest credit unions do just about anything any of the bigger banks do. Their loans still tend to be auto loans. That's the portfolio. They do unsecured loans, some mortgage lending, and some business loans, member business loans, not many though. The performance of our credit unions this year, we had assets for Kansas chartered credit unions at $6.5 billion. They had loans in the amount of $4.9 billion. Share deposits for our Kansas chartered credit unions are $5.5 billion. Their delinquency this year was 0.53%, which is a good number. And their return on assets this year was the same number. I had to double check that. The average net worth ratio for our credit unions as of September was 11.49%. NCUA standards are 7% is adequate. So that extra cushion is what will help get our credit unions through this year. That concludes what I brought today. So if you have any questions.
Thank you very much. Committee, are there questions? Senator Warren.
Thank you, Mr. Chair, and thank you for being in committee today and the very informative presentation that you made. Just a quick question. Last session, the legislature passed and it was enacted House Bill 2087 requiring agencies and departments to review their rules and regulations and report to the legislature, to the Joint Committee on Administrative Rules and Regs. When is the department's review report due?
I don't have that number. Full disclosure, we have a goal this year of going through all of those because some are actually dated. For example, the one that stands out to mind as low-hanging fruit is mergers have specific timetables of notifying our credit unions, and they don't match the NCUA timetable. So our credit unions have to do both, and it's confusing to the members. So that one I know specifically needs to be addressed. I actually would like to go through all of our regulations because the business is changing. And what I don't want to do is regulate our credit unions out of business.
Well, that was kind of the goal with the legislation, to make sure that our rules and regulations for the state of Kansas are appropriate and, not out of date or overly burdensome for business in Kansas.
And another part of that, is for me is to maintain the sanctity of my department. I need to be the right regulator and keep those state chartered credit unions state chartered. And so we have some friends in different states and different agencies, and we kind of want to look at some of their best practices.
Best practices in other states.
So, yeah, to look and see what applies and what doesn't apply, and work with Michael to see what the credit unions are thinking. I mean, we need to regulate, we need to promote safety and soundness, but the business is changing so fast.
Right, and this is kind of, if there a push and pull between, what, we need businesses to be able to operate, but at the same time, consumer protection.
Exactly.
We obviously need, and so I'm glad for that review happening.
And there's an interesting stance that's taking place between the two major regulators. The FDIC is looking at things a little differently than the NCUA. And since we're in tandem with the NCUA, they're being more progressive. They're seeing this as a strategic strength for their credit unions. They are giving them a little more latitude in some of these new things and encouraging fintech, whereas the NCUA is maybe taking a more pragmatic stance. So we're going to embrace that, but look closely at our credit unions that are going to take that on.
Thank you, Mr. Chair.
Any additional questions? Julie, thank you very much.
Thank you.
Committee, we will now turn our attention to no stranger of the legislature, but in a new position. Please welcome Michael Murray, who is now the Executive Director of the Kansas Credit Union Association.
Thank you very much, and thank you for how quickly you guys publish your calendar and for FI and I here in the Senate, because immediately it was getting all sorts of questions on if the regulator was directly related to the regulated, and no is the official response there. But no, I thank you for everything they do for us for the state, and it's great to be back and good to see you all again. Definitely a different than being right back into campaign season like every other year. Excited to talk to you about the good work that credit unions do in the state, and thank you for the opportunity. Like Julie mentioned, there's a long history of credit unions operating in Kansas, the first one being chartered in 1929, and then leading, right into the Great Depression, where there was a need for a financial institution option that was structured differently from traditional financial institutions to serve a market that was either an unwillingness or just mostly an inability to serve. And that is because of the unique structure of credit unions. We are a not-for-profit cooperative model, similar to ag co-ops and electric co-ops that are prevalent here in the state. Credit unions do not issue stock or pay dividends to outside stockholders. They are governed by a volunteer board of directors that is elected by and from the members. So then they're locally owned and operated by the members of the credit union, with each member having an equal vote and equal share in the credit union. That and several other aspects, that allows for earnings to be returned to the members in the form of lower loan rates, higher interest on deposits, and lower fees. It's common for Kansas credit unions to return over $100 million to their members. And that's a unique benefit in obviously both to the members that are in there, but also it allows them to serve underserved communities, people with credit scores with 640 or lower, and it's a big benefit to the state. Membership, like the department mentioned, is over 1/6 of the population in Kansas. And that's, meanwhile, when credit unions only have around a 7% market share of all deposits in the state. So that's, less than a tenth deposits, with the population being over 1/6. So I think that speaks to, a broader swath of population, while each, the average loan obviously being much smaller. And so there's banks and credit unions, I think in this building, in my years here, it always seemed like people were kind of ready for there to be some kind of, brawl or fight between the banks and credit unions. And that has happened. There's been scuffles, it seems, but we agree on 95% of issues out there. And certainly on the federal level, I've been talking with Alex and our counterparts of the KBA, and we're in the foxhole together on several things at the federal level right now. Both in the legislature, but also regulators at the federal level are one of the biggest struggles for both of our industries. And that's something that our association, as well as the KBA with the bankers, is we try to help with compliance with the regulators. 'Cause that's one of the big reasons why the burdensome costs and regulation, mostly from the federal level, is one of the factors that leads to consolidation of both banks and credit unions in the state. So we try to do everything we can to stem that. But like other financial institutions, we've gone from hundreds and hundreds of our members, and now we're down to 50 state chartered. There are also 17 or so federally chartered, 19 federally chartered credit unions in the state. So we're trying to do everything we can to hold on to that. On that front, policy-wise, this session, the credit unions are not coming with a big slate of policy proposals to the legislature. There are definitely some options we're looking out for, and opportunities, when they arise. I mean, you had the loan deposit program that some of you worked very well on a few years ago. The big housing bill that passed just recently. That the first-time home buyers, all of that. Any opportunity like that to open up lending to more consumers in the state and get them in a financially stable position to move forward. We're happy to partner with you on that. So one issue that's been in the news and the Senate and House leadership has said is going to be a priority for the next 2 years is the ESG legislation. So we're just, ESG legislation is not inherently bad for financial institutions in the state or federally, but it's how it's crafted. And we hope that we can work more with you to, ahead, during the debate on how that goes. That we, we're both unlucky and lucky in Kansas because this kind of really started percolating in the federal or nationally in the dialogue towards the end of our session last year, and really started gaining momentum. So there wasn't a whole lot of time to craft a perfect ESG bill that doesn't directly harm local credit unions, banks, and businesses. Since then, a lot of other legislatures have had their sessions and have passed legislation that I hope that we are able to take a look at and see what's working, see what's not. Because frankly, I mean, as a kind of a member-owned businesses that credit unions are, we have a diverse opinion within our members for how to proceed with ESG. So we just want to be a partner in helping the debate as that goes forward. Like I said, we don't have a whole lot of policy proposals that we're going to be filing this year. But yeah, obviously with the big budget surplus, there's going to be all sorts of discussions on tax. So we'll keep engaged on that front and anything else that comes before us. If there's any questions, I'd be happy to talk more.
Michael, thank you very much. New executive director at the association, a new name. I see from the logo a new color.
It's a beautiful color.
You no doubt had some influence on that. Can you tell us a little bit about why the name change?
Yes, and thank you. I skipped over that in my notes. As the last 6 or 7 years, we were known as the Heartland Credit Union Association, and many of you know Stephanie has been in that role for a while now. There's a kind of a trend where associations are also merging with each other in this world. So Heartland represented Kansas and Missouri, both at the state and federal level. We're merged with a larger group that allows us to have more resources, both on the advocacy front, but for services to our members like help with compliance with regulation and everything. But yeah, we do get to rebrand here in Kansas as the Kansas Credit Union Association with that beautiful purple logo. It's almost spot on to royal purple. You can't explain it.
If you look at that logo, it looks like a power cat if you hold it certain ways, but.
I can't comment on the creative talent of whoever was designing the logo, but it is beautiful. But yeah, leading up to this, I've either had the opportunity to meet with each of you or am in the works working with your staff to set up meetings soon, just to talk about the potential threats and opportunities for our industry on the horizon, and I would love to talk more soon.
We have a credit union day coming in the near future.
February 6th, and so we'll have the formal invite out to everyone, but there's a reception at the Topeka Country Club later in the day, and then we will have an army of our members, a friendly army of our members in the building throughout the day that'll be setting up meetings to come to your office on February 6th.
Any additional questions for Michael? You did a very good job in first time of testifying, and Senate FI and I will see you again.
Thank you so much.
Sure.
It's an honor.
Okay, committee, that concludes our work for today. We will not meet tomorrow. Monday is a holiday, and we will not meet on Tuesday. So back next Wednesday to begin hearings on legislation that's in front of us. So With that, we are adjourned.